Hey everybody, Jeffrey Beamer here, Senior Investment Strategist with EWOTrading.com. It is Monday, March 25th. We are in a holiday shortened trading week with Good Friday this Friday. Markets will be closed. Let's start off the day by jumping into our trade that we last looked at. We looked at a trade on Children's Place. And the strategy that we utilized was a straddle in anticipation of implied volatility rushing into the options ahead of the earnings event. Now, something really unique has happened here. But between the time that we entered this trade and the time, well, today, because we're still in the trade, the news reports are coming out all over the place with when the exact earnings date occurs. One source has them occurring after market close today. Another source says somewhere between now and Thursday. I have another source saying that it's in 8 days. So what do we do in a situation like this? Well, you got to be flexible. And what I decided to do here was hang on to the trade really through Wednesday, because once again, Friday is a market holiday, and Thursday, these options expire. Okay, the options that I used expire Thursday this week because Friday is a holiday. All right, so what I'll do is give it till Wednesday and then exit. Right now, it's not making much of an impact to our portfolio either way. We're down just a few basis points on portfolio. So this is a hold for right now. All right. Kind of a unique position. We don't get into this situation very often, but all of a sudden the earnings date, nobody knows when it is. So, which is rare. All right, let's move on to the top headlines for today. As I did mention, markets are trading a little bit lower here going into a holiday shortened trading week. Once again, we're closed Friday for Good Friday. Next headline came out, news stories came out about the European Union. Boy, they love picking on U.S. companies, and they are targeting the usual suspects again: Meta, Apple, and Google, or Alphabet, and filing antitrust against them and all sorts of things. These sort of things take a couple of years to work out, but still, the headline is there and kind of put these stocks under pressure a little bit. Moving on, we have a big treasury auction this week. We have $176 billion worth of treasuries are going to be auctioned off. And the unique thing about where we are in the auction process is the grade reports are reflecting some issues. And what I mean by that is, if you say have a child that's a straight A student, and then all of a sudden they come home with a report card that's full of B, C's, and D's, something's going on. And same thing here. We get a variety of grade reports ranging from B to D on these treasury auctions, and it'll be interesting to see how 176 billion goes off this week. All right, and last headline for today is oil prices. We see a little bit of geopolitical unrest, as well as OPEC standing firm on production rates. That's putting a bid under oil prices, meaning oil prices are holding or moving higher. And we'll see that as we get into our charts here. So let's move on and take a look at our first chart of the day. We're looking at Spider Index Trust here. And even though the markets are under a little pressure, we're off the highs, we are still embedded in a very defined channel. And this channel is very strong. It's just minor pressure. In fact, it might be even giving us an entry point to then put a position up and out of the money with the market moving higher. But for right now, we're starting off the week slightly in the red, and at least on the S&P, but nothing to worry about. We're still embedded within that channel. Moving on to the Qs here, we have kind of the same thing happening. Let me clean this chart up a little bit. We have really the uptrend is continuing here. I can put on my moving averages. They're both pointing higher here. I could put on a trend channel like I had on the S&P 500. But what we'll do here is put on my Heiken Ashi candles And you'll notice here that we had three solid green bars last week. And today we have a little bit of indecision. Now, the one thing to note here is what's unique about the Qs here is this sideways trading pattern. Okay, this is interesting since the pattern on the S&P is really vertical and there's really no horizontal trading. This upward sloping channel has run into a little bit of an overhead resistance here around this 445 mark. Okay. And really the trade here is if we can break above 445, then we're going to be pushing higher. And we just need that confirmation. We don't see that right now. We just see this nice sideways trade going on the Qs. And really the same thing on the small caps. All right. Same thing happening on the small caps, even though the trend is up. And you can see the moving average, the short-term moving average, this is a 21-period moving average. It's pointing higher. Long-term moving average is pointed slightly higher, but I have this very defined trend line here. We are well above it, and we do have some sideways chop on IWM, which represents the Russell 3000, but the overall trend is higher. And really, if you're looking for a place to get in, this might be it. And confirmation would be above a close, above the high here at 208. Really, a close above 208 on IWM, and I would be long. I'd do anything bullish on IWM as we move forward. Okay. Now, interesting. We talked about oil being higher. Let's look at USO. It's going to be up. You know, we had a little bit of a pause, a little bit of a rest here around that the $75 level. We pulled back. And what's interesting today is we're well off our highs. We looked really good in the morning trade, but as we got closer to midday, we've held on to about half of our gain today, and that's still up 1.3%. We'll see how this candle turns out. You know, the news out of OPEC and really demand and production, everything tied in. You know, that is the reason for this big push higher on USO. We'll see if it has some weakness. If it gives up today, I would say we'll retrace down to about the $75 level. And once we get there, then we'll call the next shot. But for right now, the trend is higher. All the moving averages are pointed higher. And I would just want to wait and see how this day finishes up before making a decision on USO. Now, the real movers are gold and the metals, all right? So we broke out of this little wedge last week and I thought the big rally was on. But then come Thursday, that resistance area up there around the 200, 201 level has held, and we're fighting it right now. We're at 201.40 as we talk today. That is some pretty significant resistance right now. But some of the underlying currents into why gold caught this rally, you began to rally like this, is very interesting. All right. So there is news out there. It does affect the metals and the US dollar. Okay. But for right now, I would still be bullish on the metals, and gold is up just a little bit. Silver, it's off its recent highs, but it's holding right around the 10-period moving average. Now, I have my hike and a sheet candles on, and you can see that we're forming kind of a defined, actually today, if we close lower today, okay, if we close below the previous candle low, that would be a trigger to go bearish on SLV. I find that very interesting. Let's look at a regular candle, okay? And you can see the weakness there, the big wicks on the top, and we're down near, this is interesting. I see silver maybe pulling back a little bit, maybe down to the $22 level, which would be the next big brown number of support. But that 23 level up here held, and we're pulling back. So there might be a breather within the metals over the next week or two. But again, there's some underlying currents out there that say, ooh, metals might be a good place to be, along with oil might be a good place to be, and maybe shorting the dollar. All right. So, speaking of currencies, let's look at bonds. We'll start with the long end of the curve on TLT here. You can see that we're trading lower today on TLT. That means rates are higher. Okay. Rates are higher in really anticipation of a couple of things. But it has been sideways trade. All right, really look at all the time it has spent down here under the $95 level and above 92. Really in that $3 range. It did poke its little head out of it up here. Let's see here, my little doodle. Up here it popped its little head out of the range, but it quickly dropped back down, and now we're trading. We're trading sideways again. I don't know if it's going to be that tight, but you can see that we might be in store for higher rates, because if we continue to press down here and start closing really around this level, um, really, I think a close below 92. Okay, I think there's your line in the sand. If we close below there, boy, rates are off to the races, meaning higher, because bonds are dropping, rates would be higher. All right, so let's move on to the short end of the curve. But that would be SHY. And same kind of story here. We popped up, meaning rates were dropping, but now we're getting a little higher rate on the short term. And the interesting thing about this, you'll see here on the next slide. Really, let's jump ahead to our inverted yield curve, because that is showing a little bit of separation. We were looking at a flattening of the yield curve, but now we're getting compression. So if we pull that chart up, you'll see what I'm talking about. We're down at 1.27 on, or 1.24 on that inverted yield curve. That is, um, um, well off the high. Okay, that we saw. Really last week. All of a sudden, we're curving back down again. It's hard to see here, but there is a little upward sloping trend line, which means a flattening of the yield curve. But right now, we have been inverted for 18 months, meaning short-term rates are higher than long-term rates. That has always been a precursor to higher inflation and a recession, specifically a recession. The research shows anywhere from 6 to 18 months of an inverted yield curve predates a recession by 3 to 6 months. So we'd be looking at summer to fall. We'll just keep our eye on this, because we were very encouraged by flattening, but there are some underlying currents out there that shows that higher for longer is definitely in place. If we move to the next slide, let's look at mortgage rates here real quick. Mortgage rates have actually dropped this week. Okay, the blue line that you see here is the Mortgage News Daily Index. That is a daily rate, and we have dropped below 7%. The gold and the brown are the Freddie Mac weekly survey and the Mortgage Bankers Association weekly survey. Those are weekly numbers. So the gold and the brown or gray are weekly numbers. The blue is a daily, and we have dropped back down back into the sixes on 30-year mortgages as an average. So I think now what we might be, one headline that I did not write about this morning were that home sales were down unexpectedly today. And so if home prices begin to ease, which is not something that any major home research institute, like everybody from Redfin to the real estate National Association of Realtors, to Goldman Sachs. They've all revised their housing cost averages up significantly, up meaning higher, that home costs will actually rise. So the fact that we got this pullback here, we'll see if there's any follow through moving into the upcoming weeks. But very interesting that we were off on that today. So let's take a look then. We're at the very end of the big earnings season. What's really interesting about this earnings cycle is that it lasted so long, literally from mid-January now to mid-March. They really spread things out. We have over 800 companies declaring earnings this week, even though we're on a trade shortened week. But there are some notables. GameStop has earnings tomorrow after the close. You have McCormick's tomorrow morning. These aren't major like tech companies or anything, but they're still famous, good names. We do have Carnival Cruise Lines and Semtech and some biotech. There's definitely a lot of stocks that are notable that are having earnings this week. But 800 in all, and then all of a sudden next week we really drop off. We're talking around 100 companies beginning next week. We got this about 2 to 3 week break, and then the middle of April, boy, it gets busy, and it gets busy fast as we head back into the next earnings cycle. So we'll keep an eye on that. But for us, we are continuing to look for opportunities, mostly delta neutral wise. And one of the things that we do is look for stocks that are affected by earnings and are really going to move. Okay, that was the fact with Children's Place. We were looking for implied volatility to move. Today's candidate, we're going to look for it to move as well. And before I get to that, I just want to remind you that we have a free guide on how we trade stocks around earnings. It's available at ewotrader.com/straddle. That's ewotrader.com/straddle. It's a free guide. You can download it and see how we trade stocks around these earnings events and have, as you've probably seen here, a high degree of success with these types of trades. So today we're utilizing another opportunity for breakout in GameStop. That'll be our featured trade of the week. We're looking at GameStop to actually jump. It has earnings tomorrow, and we are looking for the stock to jump. Now, right now, it's priced in for about a 19% move, and that might seem like a lot, but this stock has a history of moving. Okay, so what we're going to do is look to capitalize on that pop in that should come because of how the options are priced and how implied volatility is acting, and we will see how we do coming up next week. So that's it for this week. Everybody have a great week. Once again, shortened trading week with Good Friday. Markets are closed this Friday, but we'll be back next Monday. Have a good trading week. We'll talk to you again then. Take care.